Welcome, it's the Crypto Sniper. How are you guys doing? Delighted to be back with you. Haven't been speaking to you for a bit. We are in a beautiful Boca Raton. I found a quiet, dark room. It's got terrible acoustics, I expect. I may echo around, but we are going to be updating you on a very, very important point. Two very important points, and this is going to be our most hated video. Why is it going to be our most hated video? Because we're going to upset Bitcoin maximalists immensely with what I'm about to say and put forward to you as a high position. Also, generally, crypto followers hate it when you tell them there's something new to consider that may affect everything and change a lot of things. They go, oh, but you're changing your mind, or you're doing this, or you said this previously and now you're saying that. They don't understand things change and things move. And there is also a key component that we kept as a wild card that may be coming to play. In all our videos, in talking on Bitcoin and the bull market, we have consistently said one thing. There is a higher possibility than normal, that a demand-destroying event could occur that could lead to a substantial mid-cycle correction if it was to occur. People forget that there was a major demand-destroying event before the bull run of 2021 that took you to the highs of 64,000, 2020, 2021. And when, of course, that was 2019, the CV19 events, and everything that went with that. You had a major spill. Then the proliferation of quantitative easing and everybody receiving money saw hot money chase high beta speculative aspects. That was the nitroglycerine that took you from the 4K dip back up to the 10K and then ignited you from 10K when the cure of proliferation came into town and blasted you up to 64,000. That was required. It was required to make it happen. So far, we've had the institutionalization that brought the Bitcoin ETF that gave us our run from around the 25K up to the high of the 74, just under 74, 73 and a few change. But since then, since March, actually you've been in a bit of a sticky, contained area. We are going to make a case for something new that we've probably only referenced once or twice on YouTube ever, and also we've mentioned far more often inside our community, but unfortunately no trading metamorphosis programs are available. You can just do the self-study, which is awesome, by the way, and it's a lot cheaper, and you can get all the content in theory and still pop on weekends for both a live and also pick up the recording, as well as our live trading days with me as well. So whilst you don't get the community, you can do that. Click the link below for the self-study option. It's way more affordable. We are unfortunately on a waiting list for the trading metamorphosis. If you haven't been given an offer, you unfortunately can't get one until we reopen that. But back to this. So what are we going to show you today? Well, here's what I'm going to show you today. I am going to start with Bitcoin dominance, but I'm going to do a dirty little trick that I haven't done in a while with you, and it's called the flipping of the chart. So here we go, to the charts. Bang! Here's Bitcoin dominance. Let's take it to the weekly. This is your Bitcoin dominance chart. Obviously, during these periods, Bitcoin dominance was largely 90 whatever percent. Things like Ethereum and many other things were just getting themselves ready. I will highlight the super low vol and the grinding here. The super low vol and the grinding that came before the spill and the major alt run that actually saw alt massively overperform and get pumpermentals. This was the biggest moon juice of everything. You also had Bitcoin Cash get split out of Bitcoin. You had all these other things coming on you. Obviously, XRP was already around, Ethereum was already around then, and you came all the way down, and Bitcoin in the end was worth upper 30s, a dip below 40. In the last cycle, whilst we had a bull run and Bitcoin did 64K, the alts did a run, but they didn't run Bitcoin down near as far. And you got just below 40 in most of the time. And in fact, in the early parts of the new bull, we were highlighting about how the stall box and range was to be broken, and we made a number of predictions, and that continued to happen. And you've had the perpetual grind higher of Bitcoin in the BTC dominance chart. This is the normal way round BTC dominance chart. I am now going to do something that helps it easier for you to see, and that's called flipping the chart. So I have a special template that's called inversions. So the green candles will now become the red candles, and the red candles will now become the green candles. Let's get BTC DOM back up, and you will see this in a whole new light. So we're going to wipe our face. We're going to go up to the weekly chart to get this into perspective. And we'll also note we have a volatility index on there as well to highlight a number of things. In fact, let's go monthly. How do we do on the monthly? We'll maybe flip that to bi-weekly just to get a little bit more detail. Being nitpicky. 2 weeks will do. And let's get rid of that volatility just for now. It's not yet pertinent. Why? Okay, so 2 weeks. What you might notice on this structure, and it's so much easier for people to see. And we did this in our live trading day. You get the news before the news when you come and engage with us. So live trading days and self-studies are continually available. We did this for the payrolls number that came out. Unemployment came in down. The rising wedge in the Dixie, by the way, and we'll come back to the dollar, but just let me mention it, that was climbing higher, dollar climbing higher, broke to the downside. So you actually were in an environment on the non-farm payrolls with the unemployment number coming in higher that actually saw dollar go down. And in that time and space, what did our friend do? Well, he didn't do that well. He actually broke down. Bitcoin has been weak. You probably know it. And all this talk about Germany selling 3,000 Bitcoins. But hold on a minute. Michael Saylor's borrowing till kingdom come to buy, and of course he bought the local high that he has a habit to do, and why can't he just OTC buy all of those German coins? And there's others, and we hear about, oh, there's so many millions going into the Bitcoin ETF as a result of, BlackRock's Bitcoin ETF, all of the stuff. Why aren't they soaking up this massive fall that has occurred on Bitcoin? Why is there a lack of bid underneath there? And I'm here to tell you that all is not well. The headlines don't make sense. Bitcoin should not have been going down as much as it was. And the key conclusion we have come to is two things. Bitcoin may in fact be ready to go down even further because it doesn't make sense that it's going down so far. There is a weakness in the economy. I expect retail and the consumer is largely wrecked. The institutions have already had that wall of money release. There's maybe not so much coming back in at the moment, and corporate and investment institutions are maybe not going to the highest risk end of the market. So I want to remind you, when we did 64K, Bitcoin was outperforming the NASDAQ. By the time it went up for the 69K, the NASDAQ was doing better and people were already retreating out of the highest beta asset class, which is the crypto market. And they were putting more of their money back in tech that they know. And there was a de-risking when you consider lack of engagement of crypto. It is a de-risking to the lower risk of the NASDAQ, which eventually, of course, also pulled back. We have called that this is a super low volatility, squeezy Japanesey on the Bitcoin dominance. In other words, remember, this is the inversion chart. I have turned this upside down. So if you're thinking bullish, and many of you have bull bias, if you're thinking bullish right now, you are actually an anti-Bitcoin, non-maximalist, and I feel exactly that. I feel Bitcoin is in peak valuation. I think it's in the equivalent of where it was during these periods in 2019-21, where it was at its strongest localized percentages. These were 76%, by the way. So remember, the scale goes down because it's inverted now. And each time it gets less so. This structure that you are overall looking at, that we have drawn for you here on this chart, is the inverted Bitcoin dominance chart, and we are making a prediction today, and it's not for tomorrow, it's not for next week, it's not for next month. This is a 2-weekly chart. One candle is an entire fortnight. This captures all the way from 2017, this pattern, to where we are today, and it's done two brilliant first impulses. We still need a third. So it ain't finished. It ain't finished, but it is at a localized bottom in our overall opinion, and that is likely to see it do a turning, a basing out and a turning. And we've already, since we brought this idea a week and a half ago, 10 days ago, and we're discussing it in the community and then bringing it into the live trading day, etc., pointing out. And we've actually done this setup in the community a couple of months before, and one of the community members have done it, and it has continued to mature. We have two excellent impulses for a very strong upside move that is in play, and they are here and now. Strong up, falling wedge down. That means there's more resistance to the downside. You can see a basing period was quite lengthy there. We call that base plating. So you have two touches. So that's kind of like a W bottom. You can see the W there, boom, down and back. There's the neckline. So that was all your basing period, your relative low one. This is, of course, your high one. Only when we call it high, remember it's the inverted chart. Then the very impulsive move. Once that W was formed, then a lengthy squaring out at the top. We call this table mounting, or almost a muffin top. You've got that sort of churn and a little bit of complexity at the top where you're zigging and zagging, finding value. That, of course, on the normal way around chart was the stall box at the bottom, and rather than a stall box, it was a basing box at the bottom that was leading to the subsequent Bitcoin dominance that we predicted that saw it walk out to the downside. We are saying that period is over. You are at peak Bitcoin. There are no fresh new drivers for Bitcoin, and Bitcoin is going to underperform the overall total market cap. Now, many of you will go, okay, that's easy. That just means alt run time. We're about to have a major alt run. And here's the problem with that. Yes, probably part of that. Remember, this is going to span a long period of time. Part of that will be alt run. Let's just buy a bit more real estate here. Part of it will indeed be alt run, and part of it could be just going down less in an environment where Bitcoin is going down more. So what do we expect the dominance to do? Let's finish on the dominance so that we're super clear. We are squeezy Japanesey in our falling wedge that we've drawn for you over here, down, and we are expecting Bitcoin's dominance to shed badly against the rest. What we then see is another impulsive leg. So there's an abrupt move coming in Bitcoin's dominance, in our opinion. All the up legs have been super strong. This is typical of very good HVF structures. Super strong, long-winded and slow on the down legs, super strong on the up legs. So we're seeing a super strong, not as strong as that, and that was also not as strong as that, but super strong nevertheless, probably coming in and around the 40 zones again. And thereafter, again, a slower drift to the downside. So a little bit of a revival in Bitcoin relative to the rest of the alts for a bit. And then eventually, the kickoff, the real event. And by the way, this is not to time frame. I'm just needed some space to draw. It doesn't mean I'm saying it's happening in 2026. It could happen in 2025. It could happen even sooner in 2024. It could take till 20. I'm not making a time frame prediction on this. You'll get an abrupt breakout to the upside. And bad news, Michael Saylor, bad news to our friend Max Kaiser. Bad news. We are predicting today, look into the eyes, fantasize, upset the people. Oh dear, sorry, Bitcoin Maximalists. We are predicting today that Bitcoin will fall below 20% market cap. Yes, you just heard me say that. We are predicting today Bitcoin will fall below 20%. The target says 23.52, but as you can see, these are very abrupt, high, fast moving events. And overall, I would anticipate, so it's certainly getting below 25 if it just made our target and stopped. But with the nature of the impulsive move that would be generated by this, Bitcoin will sound like old beer. Something's either going to happen or it's just going to date and turn into a Tamagotchi fad. Or it could even be micro possibility, not a prediction that I'm making, but it could even go to zero. It could disappear. It could fail. Small possibility. We're not saying, we're just saying that when you do the pie diagram of everything that can happen, there's always that thin slice of ceases to exist. Yeah, pets.com, boo.com, etc., etc. It was an on-ramp. It served its purpose. You drove all the motorbikes into the back of the prison truck. Everybody is imprisoned with the riders. You take the ramp away and you shut the back door. Ramp served its purpose. Yeah, that's on-ramp. But what we are saying is, with a higher probability and expectation of outcome of events, is that you're going to run 23.52%. Can I just be clear? You are currently in and around the 54.5%, 55% today. We are not saying a halvening, we are saying more than a halvening. More than a halvening in its overall scale inside this pie diagram. And we have the technical proof of it. We don't just say that because we're alt-maximists. We don't just say this because we're anti-Bitcoin. We have a technical setup that is implying this. Can you be clear also that while there will be some Bitcoin relative devaluation during this phase, there will also be a period where lots of people saying you're wrong with your prediction and this will occur? And that will likely see Bitcoin firm up again, it can do this. And how long that will be, we don't know. But not too far after that, a violent, strong move will take Bitcoin to sub. And that could be a number of things. So I've done a small diagram. I want to turn to that and show you that. But before I do that, I want to also say, what is the Bitcoin USDT chart looking like? So Bitcoin USDT chart, let's go on to the next phase. So I have made a case right here with you in terms of Bitcoin that is saying you could in fact be in a situation where Bitcoin's dominance is going to fall below the 20% mark. Important to remember in that statement, when I say Bitcoin's dominance is going to fall below the 20% mark, that this is not tomorrow, next week, or next month. So this is a process, but it's going to begin getting less if we are to have that impulsive move for the third impulse that I drew for you previously. Now let's look at Bitcoin versus the dollar. What's going on around here? So this is the far larger time frame, Bitcoin on a fortnight, the same fortnight we had the Bitcoin's dominance, so respect that this is pretty big time frame. Now what I want to show you and take you into is what's currently happening more specifically in the more recent history. So generally, Bitcoin has been super dominant against the dollar. There it is. You could see what a great trade that was. Break, pullback, down. So remember, we're on the inversion. So this is all Bitcoin bullishness. The red candles are Bitcoin bullishness. This is dollars performance against Bitcoin. Losing value, losing value, losing value. More recently, big loser of value for the dollar against Bitcoin. That was, of course, the pump from the 25K. Remember the possible head and shoulder that didn't. Down she goes. So let's get into what I'm looking at more recently, because I want a shorter time frame. When I'm sitting here on a fortnightly chart for each candle, this is a big time frame. So when I'm saying Bitcoin dominance is going below 20%, it's got a 23.5 target, it's going to overshoot, probably go below 20. It could mean it's going to naught, could mean it's going anywhere, but it's going a lot lower. That means a number of things. Some are just sitting there and going, dude, you're taking so long to say it's an alt run. No, there's much more to this, because what is Bitcoin going to do? Why am I saying it's not just an alt run? Let's bring up this diagram just for those people to explain. Aren't you just explaining an alt run? So here's what happens. If Bitcoin dominance, Bitcoin in dollars, future performance, that's what I'll be talking about on the Bitcoin USDT, and this is possible, and I'm going to say, let's say alt majors. Let's just keep it out of things that haven't even yet been launched or are real micro caps now. Now there could be some micro caps that are going to become super big, but let's just talk about the top 25. Possible alts relative performance in USD versus Bitcoin. So you're saying, you think I'm just taking a long time to say this is an alt bull market. Here's what could happen. There's many, many ways. If Bitcoin, and we'll start at the bottom, the green light over here, the green one for Bitcoin, if Bitcoin is going to get mildly stronger, so this is slightly bullish, how does the Bitcoin dominance go down? Well, the alts, that is this side of the black line that I've drawn here, the alts then have to get a whole bunch more valuable faster. That is the typical alt run. Bitcoin is going up, alts are going up faster. That is the typical bull market alt run. But there's something that hasn't happened this time, and we referred to the demand destroying event. That is the turbo juice normally for Bitcoin. That was the CV19 event that pumped Bitcoin to 64. You need the cheap money. You need the proliferation, the quantitative easing. Right back in 2009, the driver for Bitcoin that took it through 2010, 11, and 12, that was QE1, QE2, QE3. That was the result of the subprime. It never faced the subprime crash. It did face the CV19 crash, and you saw what happened. It actually hit almost 14K, and next thing you knew, it was down to 4. It didn't happen immediately. There were a number of times, but when the crash came. So this is the typical alt run that everybody's thinking I'm referring to, and that's the only game in town. How does Bitcoin dominance go down? You will agree, if we're calling sub 20, most of the time Bitcoin is going to be shedding dominance from that key moment we highlighted in the first part of the video. So for that to happen, Bitcoin has to be doing less well than the overall aggregate of the alts, which is typically driven by the major altcoins in the top 25. If there's any new mega coin that's coming, it will quickly climb into that top 25. However, what could also be happening is a couple, and I'm covering all the combinations and permutations, just for those guys saying, you're describing an alt run, dude. Relatively, yes, but not necessarily against the dollar. Here's what could also happen. Bitcoin can go a little bit up, a little bit down, nowhere too far, churn around and be not much better off. That's the blue colored egg. Okay, so the green, the thinly covered green egg is bullish. The blue colored egg is chop, with no real major move to the upside or downside. Churn can chop, a little bit of continuation, but then back down, not continuing. That is generally not a good market to be trading in, because most times people get out on the downs, on the lows, along the lows here, and chase in on the highs thinking it's bullish across here. So chop. Then you have somewhat down, so that's more like this. The thin, somewhat down. Now, we could have a set of circumstances where the main drivers for Bitcoin have already happened, the institutions are in, and the alt market goes sideways, chop, like that, or actually goes mildly up. That's quite strongly up. Let's slow it down a bit. Or goes strongly up. That would be like that. So the alt market could do any of those. These two, the green eggs, the fat line green eggs, is always an alt bull market. You'll call that an alt bull market. You'd even call this a bullish alt period. The problem happens when Bitcoin goes down and the alts chop. They go down less. They hold their ground a little bit more. They're not really down, but they kind of tread water. And Bitcoin is coming mildly down. If we have a demand-destroying event and we have Bitcoin go majorly down, the alts can gain dominance by just not going majorly down. They can go somewhat down and be bearish, but not extremely so. They can chop up and down, neither up, not finishing a month later significantly up nor down. They can trend slightly up in spite of God market status. And this is a big thing, not permissioning them anymore. Bitcoin's relevance as a God market is going to recede. This is a key point that I'm making to you. Look into the eyes. The prediction of Bitcoin going down to below 20% in the fairly medium long term, not tomorrow, not next week, is a call also eventually for the God status of the Bitcoin market to dissipate. And that's not going to happen overnight, but more and more independently of Bitcoin, certain alt tokens are going to start overperforming. You could even have the strong overperformance like this in an environment Bitcoin is super strong down. Is it likely? Probability-wise, less so. Generally, these are the events that I think will happen. I think Bitcoin is going to lose ground in dollar terms. Remember, this is all in dollar terms. I think Bitcoin is going to probably be in these two boxes over here. That means Bitcoin dominance can be gained very powerfully by being in the fat green eggs over here. This is a dominant alt run. This is a moderate alt run over here in that column. And that is a nothing, period. And we have to consider all possibilities in this scenario, because if we have a steady, consistent, demand-destroying event that sees Bitcoin correct and the alts correct less so, you're sitting here, there, and there. You could have Bitcoin do light but steady correction, and you could have alts churn. That's also a possibility. And those possibilities will kill you if you go long your favorite alt against the dollar. You lose money in this space. Note all my lines now, it's getting messy. Let's change colors. You lose money if you go long dollar unless you're in these zones for Bitcoin. Moderate bull, strong bull. That's where you'll make money trading your favorite macro alt, big cap, against the dollar. These instances, you lose. Chop is never good for a retail trader. You generally lose. You might not lose a lot. But if you're getting shaken out at the lows and on the high, you're going to be losing, which most people do. They don't have method. They trade emotionally. And that chop can be fairly volatile, but just because over a month you've not changed a great deal, you can take 5-10% downs, 15% ups, quite a bit can happen. So here's the question this then raises. Here are three scenarios with Bitcoin shedding dominance that will see you lose if you trade the alt against the dollar. Over here, Bitcoin is flat and doesn't do a great deal, and you're in a mild bull. Okay, you'll make some money against the dollar in that case. You'll make a lot more if you have a strong bull and the dominance is being shed radically. There is a spell coming now on the shorter term where we expect that dominance to be shed quite strongly. Again, I want to just bring up that dominance chart in case some of you are battling to visualize again. I want to bring it back up one more time because I can feel that some of the visual elements get lost if we don't check. Here right now, I'm seeing quite a strong increase in the alt dominance and decrease in the Bitcoin dominance. I would imagine fairly firm up coming soon. By the way, look at the hammering here. See that wick? See that wick? See the wick? It started earlier but then plumbed a little bit lower. It started earlier, then plumbed a little bit lower. Now you have a hammer. Now you have another hammer on a shorter fortnight because we've not yet finished this fortnight. But you can see you're hammering out super low vol. This is why alts are going to overperform short term, and after a pullback period, which we don't know how long, are going to majorly outperform long term. Get it? So generally, this is the best moment to be getting out of Bitcoin. Sorry, Maxis. Sorry, Max Kaiser. Sorry, Michael Saylor. Apart from this period where you might get a small bit of relief and you may get a small period of Bitcoin showing up, you're at your best moment for exiting Bitcoin. How value is a YouTuber who comes and tells you this right now, this period right now, and the period before this recent correction actually was the best. As Michael Saylor was loading up at $69,000, that was your best point for exiting Bitcoin. probably for alts or even for Tether if both are going to go down. Going back to the diagram, Tether and alts are going to be a better friend to you than Bitcoin. In the downswings, which are not alt runs, so diagonally here, and the Bitcoin down, in this zone, Bitcoin majorly down, Bitcoin consistently and steadily down, your alts in this zone are not going to be a good hold, not going to be a good hold against the dollar, and there you actually will also lose money. Yet the dominance will still increase for the alts. You don't want to see this Bitcoin dominance reducing and not be making money out of it. So what is the thing you do? One of the things you do is you trade the winningest alts against Bitcoin. It protects you against this part of all the possibilities and probabilities diagram right here. It keeps you safe. You make money in all instances, providing that, as I've done on this diagram, so this is assuming we're correct. Of course, if this is a fat red egg and the alts are also a fat red egg, then the dominance is not moving in the upside direction on our inverted chart, aka down. If it's a thin red egg for Bitcoin, but it's also a thin red egg for the alts, that just means you're not winning either way. They're going the same way. And if this is reversed, if actually it's a thin red down for Bitcoin and a fat red, then we've called the bottom on Bitcoin dominance too soon. That means you're going to be going lower here. You're going to be going lower here. And overall, my personal assessment is the volatility on the Bitcoin dominance has been reducing steadily. Look at how zippy and pumpermental and complex this was, all this price behavior. What's actually happened, apart from your muffin top up here where you were turning and the Bitcoin dominance came back, this was very steady, the very low vol, consistently rewarding Bitcoin holders at the expense of alts to this point. This is a key level over here, and I don't think you're going to run that. That is your W bottom that occurred over here. Boom, boom, bosh. And our overall hypothesis is you're in a falling wedge that is likely to break to the upside on the inverted dominance, meaning Bitcoin dominance is dying. Again, this is an important insight. It's not the whole puzzle, but it's an important piece that makes you a tiny bit smarter than everyone else, because that stops you being in Bitcoin. If you think the market's going to go down strongly in Bitcoin, and we will cover that now when we go back to the BTC chart, you are positioning yourself in this part of our diagram over here. The safest thing is not to be in alts, but to be in Tether. So for this period, in a demand-destroying event, with the retail being wrecked, you're probably going to get that. And that's going to hurt in your BTC USD. By the way, this could be, Bitcoin could go, and I'm going to start talking about potential projections that are possible. This could mean, if we're getting 47.5, we're getting into the mid 40s, we may be getting 42.5 from where we are. This could go 5-10% down and still be less bad than Bitcoin. So let's cover what's happening in Bitcoin on the dollar, because this will help determine where on my diagram you actually are. So for that, we go to Bitcoin USD. So this is narrating a sequence of events. Now I'm doing it on a shorter time frame than the fortnightly, so I'm going to bring you into the daily, and we're going to start here. Now you'll see a lot of alerts are on here, and I'm about to tell you that I've been at a conference, by the way. We were at the Resources Conference. I'm in Miami, Florida, USA. Where's all our Americans? If you're an American watching the Crypto Sniper channel, hit that like button and say, yeah, Sniper, come to America, buddy. I'm here. Okay, so let's take the eye off and show you what I've been talking about. So, a couple of interesting things. Couple of interesting things, and we did this deep dive in our live trading day. You guys are getting it later. I said a revisit in that event, live trading day. You may get a revisit down towards this neckline, which is a key round number, $60,000, and simultaneously it's a neckline for a W bottom. But you're going, hold on, that's not the Bitcoin chart, sniper. Remember, inverted Bitcoin chart. Inverted Bitcoin chart. There it is. There it is. There's your just under 74. These numbers go down. They go up when I point down, and they go down when I point up. Yes, you get it? Okay. What's happening technically on the chart upside down? You have a major W bottom. Boom. You smashed the 60,000 to the upside during the Bitcoin ETF. You grinded on the downside. Remember, this is an inverted chart, into a rising wedge that broke down, return move, down, and then you had a double top that we referred to that said there will be a downside to Bitcoin. Remember, on the normal way around, we called that double top. There's a neckline right there at the 67K. Like I say, Michael Saylor announced after he'd finished buying, and the announcement came out around about the 67K mark. So I assume he'd been buying all the time between 67 and 69K. I don't know at what level. Anyway, that target played out. We were accurate. You made it. And then you ran the 60K level. This is a level you smashed through. Always key levels of significance. With momentum, you came and you got resisted there. 1 wick, 2 wicks. You even got resisted there, by the way. We'll come back to that. This is your W peak that you broke it, but you couldn't hold it. You got pushed back down. You got resisted again there on the rising wedge to the return to the 60K. Then you got smacked down when you made it again. And there is your key triggering event of a W pattern. Now I'm going to highlight, as I highlighted during that live trading day, the guys got it before you, and I might even stretch this out a little bit, but I'm going to highlight that in actual fact, this is HVF Methods W complex head and shoulder as well. And you're going to go, wait, what? Complex head and shoulder? Where's the head? Where's the shoulders? All of this. We go into great detail. We teach all about this in beautiful content, which you can get on the self-study. You will see the slides, the drawings, and everything. And I explain why, as a reversal, it's in many ways stronger than a standard head and shoulder. That's right. So this is a pattern that no one else talks about, that you can learn from us, that I'm actually saying to you has the potential to be a better reversal pattern than that which you're dealing with. So here we have the left shoulder, then the right shoulder in there. Note, high volatility in the beginning, lower, calmer, broadening structure in the end. So the head is a complex W, and it should meet its W. This is base plating high, but it's a low, obviously upside down W. So you're getting a more rounded and a less pointy left butt cheek as compared to the right butt cheek. And you're getting your two shoulders, and they are always slighter and smaller when you have a complex head. Why? Because you are getting 3 intersections with the key level of significance, not 2. And 3 times you were resisted and knocked back. Once, twice, and 3 times. There you go. That makes that neckline even more significant because it's been tested 3 times. And the base, the high, instead of just the head, so this is your normal head and shoulder pattern, like that. With the neckline, we are actually pointing you to the different color. We go with a transgender pink. Woohoo! TG pink. Get your local sex change locally right here. I'll bring my axe and I'll cut them off for you. There you go, there you go, there you go. And that's it like that. So what's actually happened what's actually happened is you haven't gone as far on the head, but the head is bulked up by having two major impulses. And it should occur typically in the halfway mark. That's why this rainbow color nation, woo, LGBTQ. No, nothing to do with it. Time frame Fibonacci is the halfway mark right there, the halfway mark, and it should occur with the head. This is the uniqueness of the pattern. And those are your two heads. So you've had double resistance at the levels. You had an extreme pointy one there, and you had very close a W hit, base plating out the low there and there. This is almost more significant because the key neckline is verified once, twice, and three times instead of just twice as a reversal pattern. Once, twice, there and there. And also your resistance, or your support in this case, is twice tested and rejected instead of just the once. So it gives you an extra degree of comfort that this is real hard. This layer here is real hard support on the inverted chart, which is resistance at the 74 through to 71,000K. Really strong. Bitcoin has rejected that and turned down, and that's what you're getting. And in actual fact, because I'm not in the markets and I didn't put a pending order, I missed my entry to short Bitcoin at just approaching the 60K mark. It seems like the wick today gave it on a weak rally. What was the best point? I want to be short Bitcoin. So hold on. I'm joining two pieces of the puzzle. I told you Bitcoin dominance is going down, and I told you Bitcoin is going to get weaker. Do you see the significance of what I'm just doing here? I'm joining dots for you. On balance of probabilities can always be wrong, yada, 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 fish-based. Usual terms and conditions, make your own decisions. I'm giving you the best that I can with what I have, utilizing the absolutely amazing HVF method, which you can go and watch all the videos, participate live with our community on weekends, and attend live trading days. Trading Metamorphosis program not available, but click that first link below for the live, and you can upgrade subsequently to a TMPs when we make them available again. So with that all said, this is a bear call. This is why this is going to be the most hated video. It's a bear call on Bitcoin. Why? You say, but you were bullish. Yes, and you said it was a bull market. All the comments, I can see them coming now. I know the average, the lowest common denominator. I know many of you who watch who don't comment are smarter and not as emotional and not as wet your pants about something. It's been a bull market. It has. However, because we never got the proliferation, the turbo juice yet, and we are in a recession where we're going to first have a sell-off and then the cure will drive the next leg. Don't forget, in the previous bull market, you made 64K and then traded 29. That is a 55% loss of value. But at least you'd already got your QE, your quantitative easing to come. This market hasn't had it. It's just had the institutionalization of the ETF announcements. So this is a short call where you should have got short. What was the low here, which is actually the high, of course, on the inverted chart. So we look at the high, 59,470. I would have loved to have been short 59,470. I don't want to chase in at 57. That's left $2,000 in. I don't know if it's going to pull back, but this is a real triggering event. This is a triggering event. Francis Hunt is called a triggering event that occurred on the payrolls day. By the way, dollar down on the Dixie on a rising wedge, gold up. Bitcoin spilt its guts. And I pointed this out on the Market Sniper X profile and the Crypto Sniper X profile, Twitter for those of you who don't know what X is, as a key event. And we went and did it with the live trading day, the crypto session, the second session after the traditional markets. This is a real triggering event. There's a rejection on this candle down from the downside and a smash through the 60 and a smash and a follow through. In short, we have targets for Bitcoin that will take you to 48.66, and we point out that the key level of great significance, that was the neckline of all the head and shoulder. of way back in the 64Ks example, when it fell from 64 to 29, 47,500. The other head and shoulder that you will know the neckline on, it's the only person on crypto that talks about the 47.5 and the 42.5, because we're the only person that drew those two head and shoulders. Because we're continuation specialists, we've learnt when reversals are there, and we see the significance of key necklines. So the target at 48, that is this W projection, by the way, is 48,665 on Binance on a daily chart, points to us that you're likely to run through at least the 47.5. Could it go 42.5? Yes, as we've shown with head and shoulders, it's the cyclical turn in the event, and what tends to happen when you have a cyclical turn in the event is that it is more bear markets. And if we have a real demand destroying event and everybody is in serious trouble and no one's spending any money and every crypto guy has sold all his crypto to make his rental check because he got fired and people are being laid off, you become a forced seller. It doesn't matter if it's value, it doesn't matter if it's good, it doesn't matter anything. You become a forced seller in those situations. You don't have the cash resources to carry you through. Don't become a forced seller in those situations. Avoid it at all costs. But it's quite possible you could run the 42.5, which if you ran necklines to the head and shoulders, the two blue lines as I've highlighted, this will turn light blue as well, but it's also the 60K. In short, I'm saying you are leaving the 60Ks and you've got a target with a 4 in front of it and possibly lower if it continues. This is a serious, interesting event. Maxis will hate me. Leave your Maxi hate comment below. Say, we hate you. You're telling horrible things. You're going to be wrong because you're stupid and you're always wrong. Go ahead, put it in. Go ahead and put it in. Our community knows exactly what to do and what we think will happen. Let's go back to the diagram. So Bitcoin is going down to 40. That actually falls into, on our diagram, it's in that fat egg, bear egg category. That means you do stand a risk if you're in alts that can happen. It just goes down somewhat less. You do stand a risk that this can happen on your alt, and that will also go down less. This could be something macro. So the probability of this particularly, is pretty high, this level of Bitcoin down hard, and that probably in the beginning, because Bitcoin is still a God market, you're more likely to be on this side of the curve for most of the major alts. Later on, after the Bitcoin dominance is heading well on its way to that sub 20K, you will be independently strong as alts more often, regardless of what Bitcoin does, and you could expect more of these kind of outcomes while Bitcoin is doing that. At the moment, because everything is wired as it is, it's the first crypto, it's the best crypto, Rada, Mono, Max Kaiser, Michael Saylor, all the cheerleaders that have built up over 15 years, that haven't built up over the same duration for the other alts, you're more likely to face a sell-off or a choppy market, which will hurt you in dollar terms. So you trade the better, winningest alts against, ladies and gentlemen, against Bitcoin. Your trade is against Bitcoin. We know which one we're choosing. We have a technical structure, and if you want to know, click that link below and take a look at the self-study program, have a chat with one of us. We will reveal to you who that is. So you can trade an alt versus Bitcoin. You can gain profits and gain even in a crashing market just on the basis you are crashing less. Remember, Bitcoin climbed a lot more than most. There are some exceptions, Sol and Ton, but then most. So it also has a lot more ground to give up. Look forward to giving you part 2 on this. In the meantime, don't forget, click the link below if you want to book a call and have a chat about our self-study or join us for a future live trading day. I'm Francis, the Crypto Sniper. Don't forget to hit the dislike button because I'm telling you terrible news, and it's not a Moon Boy channel, and there was nothing of value here, and you should all hate me. Dislike. Hit him. Or if you think, hey, that's super cool, I learned something as a piece of information. Bitcoin dominance is going to actually potentially go down, and it's going to start going down now quite strongly, and in the longer term it's going to go down immensely after a minor period of consolidation. That's really useful to know, and actually you can trade against Bitcoin with an alt and actually do better. Yes, weird as it sounds, even in a correcting market, if you're choosing the right macros. That is super cool. If you like that, you can also hit the positive like button. Till I get you next time, thanks for watching. Don't forget to book a call on the link below. Catch you later. Bye for now.